If you think the GameStop thing was crazy, there's something that happened almost exactly 100 years before on Wall Street. There was almost the same thing, but more disastrous results. So back in 1920, Alan A. Ryan owned a brokerage firm, and he owned a lot of what they call Stutz Bearcat. It was a company that made cars, pretty good company, a big company at the time, not massive, but it was a good one, and everyone knew the name. So it was trading around $100 a share. And back then, so understand what something, the rules were way different. Before 1933, before a lot of the rules went in, it was like a free for all. You could, and it was speculating. They promoted illegal shit. Half the shit that's illegal now wasn't illegal then, and it wasn't a problem. Nobody cared. So if somebody doesn't like a stock, people can get together and do what they call a bear rate, where they start shorting it. Now, shorting is when you borrow shares, usually, and then you sell them at a price, like say $50, and you're hoping it drops to like 30, and then you buy it back and make the difference. It's like the opposite of buying stock at 30 and selling it at 50. This is selling it at 50 and buying it at 30. It's a negative connotation. A lot of people think they shouldn't be there, but they add liquidity. So short sellers will they take the other side of a trade. You're buying it, they may short it to you. They're hoping it goes down, you're hoping it goes up. It's literally Wall Street. But back then the rules weren't the same. Now you need to get a borrow. So if you're going to sell the shares because of shit like this, you have to get actual borrow. You have to get someone to lend you shares. And there's rules on how much can be borrowed. So Alan A. Ryan owned about 15 or 16% of Stutz Bearcat. It was trading at $100 a share. And all these people got together, started shorting it, trying to push it down. He got wind of it and he decided, you know what, screw that. He started buying shares. He's going to corner the market, which means get rid of them and screw them over. So they're all selling. And these are all like prominent people. We didn't know it at the time. I wasn't there then. I'm just using it as an analogy. I'm not that old. So they didn't know. They all were selling the shares, shorting it, and they were famous people, like all the governors of the stock exchange, big prominent people at the time. Nobody have ever heard of now. So they're all selling it short to push it down, and he's buying every share. So all of a sudden it goes from 100 to 250. He's buying it more aggressively to 300. He's running low on money, so he borrows money from a guy named Schwab, who is not the Schwab from the stock. He runs U.S. Steel. He borrows from the banks. He's borrowing millions of dollars from the banks to buy these shares and pushing it up to 250 to 350 to 4. Eventually, he buys all of the shares of the company. Every share is there, and people are still shorting it. How? This is the weirdest thing. He owns the shares, they're shorting it. They would borrow the shares from him to sell it back to him to short it. So he ended up owning like more than 100% of the shares, and they were shorting the stock. So basically, he owns the company, and people are short. Now, remember, they have to buy the shares back at some point because they borrowed them technically. They have to give them back to him because he owns it. So the rule at the time was if you owned 100% of the stock, you could dictate the price that they have to buy it back at. So they shorted, like say, average price of 100, 200, 300. And he goes, okay, I'm setting the price at 750. So he goes, you have to buy the shares back from me at 750. Now they sold it at 200, 100, and this is a massive loss for them. This is millions of dollars of losses for them if they do that. I mean, you're talking $3-4 million in the 20s, and this is the big deal. So the problem was, remember, a lot of these short people, shorties, okay, the bears, were working and then prominent people on the stock exchange. So the stock exchange, under the guise of being fair, attacked him, started bringing him in front of committees to say he's illegal, saying the shorts were not enforceable. He brought him in the business conduct committee, and they brought him in front of there, and they made him testify. All this crazy stuff, literally to make him so he couldn't enforce this buy-in, if you want to call it. And they went at him, and he goes, you know what? I'm going to resign because you're trying to screw me over. I'm resigning from the stock exchange because he owned a seat there, and he should have sold it for like $100,000 or something like that, and he resigned. We'll come back to that. So then it's all going back and forth, back and forth. It's in the news. Everyone's talking about it. It's becoming a big deal because I bought the shares. I want them back. I should be able to sell my stock and buy you in and get my shares back. And the shorties like, no, they're doing everything they can. They bash him in the newspaper saying he's greedy. Nobody really cared about that. And they thought because he was a member of the stock exchange that he wouldn't rat out who the shorties were. Remember, the stock exchange was putting him in front of committees when the people who would lose the money were on the committees making the decisions. Kind of a conflict, right? A little bit. But the stock exchange never admitted that until he leaked it to the New Yorker or one of the newspapers and said, oh, these are the names of people, and they're the ones trying me in the cases on the business conduct committee. So it came out, it became a bigger deal back and forth, and they were negotiating a price. He said, you know what, you keep doing it, you're gonna have to buy it back at 1,000 or 1,200 or 5,000. He literally could pick any price and they would have to buy it back. So the panic was, that's where he was. He was panicking. They were panicking. He was fine, but he was spending a lot of money doing this. So this really was like one person, Ryan, fighting the institution of the stock exchange, even though they were pretending that they weren't involved. A lot like the GameStop, the Wall Street Redditor, the Wall Street Bets Reddit guys going against the hedge funds and Citadel and all that stuff. It sounds familiar. It always happens, right? It seems like the bears are always the institution. So this is going back and forth, and he goes, and they're trying to negotiate, and he goes, you know what? Forget it. I'm setting a date. So I'm setting a date to, oh, I forgot to ask, forgot to add in. The stock exchange was so pissed at him, they suspended trading in Stutz Bearcat. They literally delisted it from the exchange and said it can't trade here. So this way he couldn't buy them in and stuff like that. They did everything they could to fight this. Okay. All behind closed doors. Crappy shit. After all this, he goes, screw this. I'm doing it anyway. I'm setting a deadline of noon. I think it was April 21st. Okay. Coming up. He said noon, April 21st, I'm buying the shares in whatever price I get. And remember, here's the deal. If I short shares and I don't, and then they get bought in, if you buy them in on me, whatever price you pay, I have to pay that. So if I shorted at $200 and you bought the shares in at 500, I lose $300 per share. And there was thousands and thousands and thousands of shares on. So this was a lot of money on the block. Okay. You haven't fallen asleep yet. You might be saying, wait a second. If it was delisted and banned from trading on the exchange, how was he going to do this buy-in? Well, there was right down the road was what they call the curb exchange, which became the American Stock Exchange, went inside, but they literally traded on the curb of Broad Street. So all the brokers, here's the pictures of what it looked like. And he just traded there, and that's where we go. So then at about 11:55, all the people who were shorting stock and panicky met and they voted that they would come up. They let one person negotiate. The crowd was there, newspapers there. Remember, it's outside. All these people outside surrounding, waiting to see what Ryan was going to do. The papers were talking about it, everything. So then at 11:55, the people who represented all the short sellers, remember, they still never really admitted that it was the New York Stock Exchange was doing this. Well, they all came down and said, we'll pay you, we'll buy it back at $5.50 a share. And he's like, sure, I'll take that. I bought him at an average of 200. I sell it for 500. I make money. So he made about $1.5 million on the profit. That was his profit. He made $1.5 million on this trade, and everything thought it was done. And then the New York Stock Exchange, the vindictive bastards they are, I still love the place, but vindictive, they decided they weren't done. First, they said, you know, by the way, we never actually accepted your resignation last year. So now we're going after you. He did that to get out from under any kind of this bullshit trials they do. So they said, we never actually accepted your resignation. So we're now putting you on trial, and we're going to inside the stock exchange. And they basically didn't let him quit so they could boot him out. They banned him for life. And then when he tried to sell his seat, they sat on that for months because they knew he needed the money. They were going to screw him. All little things. They kept bashing him in the papers, and they kept delaying paying him for anything. They did not give him a place to sell his shares and everything. So now the banks are looking for their money back. They're looking for the interest on the loans that they want to be paid back. Remember, he made $1.5 million, but he owes way more than that to the banks. And so he actually lost money on this deal. Everyone lost on it. Then he needed money. So the problem was the only way to raise money to pay the banks was to sell the Stutz Bearcat shares. And they basically got together and said, we're not buying them. So he needed to sell his shares at like $100 a share to pay off his loans and be solvent. I mean, on paper, it's worth $100 million, but nobody would buy the shares. It traded like $20. This company went bankrupt. He went bankrupt. He died like 5 years later. Literally horror show. So he won in the moment, but the stock exchange came back and hammered him, kicked him out, wouldn't give him his money for the seat, and made sure he couldn't sell his shares. And both Stutz Bearcat eventually went bankrupt, and so did he. He goes from being one of the 5 richest men in the world to the bottom of the barrel.